Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. Monday, November 3rd, the first trading day of the month of November. By the way, for you playing the home game, that would be letter X, marks the spot. And it's Monday, Dan, which means there's another headline about AI investment. And so the market loves that, obviously. But wait a second. Bit of a reversal. So a lot to talk about here on this Monday at 11 a.m. on the East Coast.
Well, it's funny. We used to talk about Mondays as merger Mondays, especially when the market is rip roaring right near the highs. And we did have a merger, guy. It's not one that I think can view. This is a 40-some billion dollar merger. But I think what you're talking about is OpenAI. They're dropping $38 billion data center deals like they're going out of style. And, listen, if there could ever be a Monday or ever be a Tuesday or a Wednesday or a Thursday or a Friday that we didn't have to talk about some sort of new circular sort of data center deal where everybody is making out, right? It's up the stock market. We're going to talk, obviously, Guy, a little bit about that. But, Peter Bookvar, our good friend who writes the book report, 1 Point Advisors, he had a note out about sentiment this morning, and we're going to talk about it. I mean, it starts up, maybe they'll just flash it up there for a second. So he's talking about even more euphoric, behavior. Okay, that's basically what he's saying. So just look at this, it's just the sentiment sort of stuff. It's bull bears, it's city panic and this and that or whatever. I mean, we're off the charts basically, right? And so let's just now go to the RSP for a second, the equal weight S&P 500. And you may say to yourself, okay, well, what are we euphoric about? Well, look at that thing, Guy. The RSP on the year is only up 6.5%. The S&P is up 16.5%. The NASDAQ is up 23%. So there's something going on, and Doug has been talking to us about very weak breadth over the last week and a half or so. When you have euphoric sentiment readings, you have a market that every day you wake up with a new headline that is drawing the biggest names in the markets higher, and then you have an equal weight S&P that can't get out of its own way. There's something's got to give here.
Speaks to the top heaviness of the market. And, as much as people want to say things have been broadening out and, maybe broadening out around the edges, some banks participating, obviously some industrial stocks getting off the mat. You've had some pharmaceuticals, but by and large, all you need to do is look at this chart to realize that, wait a second, there's not been this broadening out that everybody wants to seemingly talk about. And that might be fine. I mean, maybe it's just a matter of time before the other 492, three names sort of get off the mat. But, Doug Cass wrote about it. It was last Tuesday. You had, I think it was 345 stocks. I might be off by one or two. In the S&P 500 were down on the day. So 69% of the S&P 500 was lower on a day where the market did really well. And I think that was the first time we saw that type of negative breadth in history, at least if not in history, over the last few decades or so. And that's on top of the indicators you just said, bull bear sentiment, CAPE ratios, Buffett indicator. And by the way, over the weekend, we learned that Warren Buffett added more cash to the balance sheet. I think now it eclipses $370 billion or so. There's a reason why that's happening and why he's sort of staying away from stock buyback. So you tell me what these things are indicating. To me, again, they continue to flash red. Market continues not to care.
Yeah, I mean, there's other things too, right? You saw that article in Barron's, and I got to give you credit. You won't give it to yourself. You've been talking about MicroStrategy or strategy. You've been talking about this treasury strategy, let's call it. I think that's probably why they changed the name, where Michael Saylor, CEO of said company, had been basically, teaching folks, CEOs or whatever, about this strategy and why it might work for their balance sheets, and, teaching about or telling them about this new world order where if you own this asset, you sell your, your equity of your stock, sell debt of your company, this and whatever, and you load up with whatever it is. It used to be Bitcoin, then it's Ether, and now it's a bunch of other crap. The Barron's article, and we'll put it in the show notes. I mean, it's talking about how this trade is not working anymore. It's talking about how the premium that the NAV was trading to the underlying is, been collapsed, right? And so when you think about this, it was actually something that it was a bit of a Ponzi in a way. And I'm not saying Michael Saylor is like Bernie Madoff, but what I'm saying is the more folks that he could get doing the same thing that he was doing, the better it is for his 600,000 Bitcoin holdings, right? And so we know there's nothing going on with this company. He made one bet: sell everything at the company that's not bolted down by Bitcoin. Okay, sooner or later you get retail involved, and they got the ETFs, and all this stuff. You need other buyers. You need natural buyers, and so that's what happened. And I think a lot of these companies that bought at much higher levels than him are going to end up choking on it. There's going to be a really bad unwind, right? And go and look and see how a lot of these recent IPOs in this space, just the brokers or whatever. If you look at Circle, you look at Bullet, one of them trades well. Gemini, they don't trade well. So at the core of all this stuff, we have this AI news that comes out every day. We have this euphoria about almost every headline that exists. Tariffs are bad. Tariffs are great. Tariffs might go away because the Supreme Court, overrules them. Who cares? The market's still at the highs. Bitcoin was great at 125,000. It's still great at 105,000. But all these companies that were buying Bitcoin, their stocks are not doing well. There's just so many, I don't know, push and pull and this and that or whatever. But none of it speaks to, if you told me that the equal weight S&P was trading better than it is, I'd say, okay, we can digest a bunch of this stuff. But it all seems to be narrowing in a fashion in areas that just don't seem like sustainable.
Yep. And I don't want to get bogged down in MicroStrategies, but you might as well throw a chart up, because this stock has now been cut in half from its all-time high. And maybe that is part of the plan. I'm not exactly sure. I think the average price now of Bitcoin on their balance sheet is approaching or eclipsing $74,000 a coin. Obviously, we're still considerable ways away from that, but Bitcoin hasn't traded particularly well. I think it's trading below 106 as we speak. Now, again, I don't want to make a huge deal of it, because it was just recently 123,000, making a new all-time high. But over the last, couple months or so, there's been something clearly going on. So you have a stock market basically at an all-time high, Bitcoin basically at an all-time high, backing out the last couple of weeks, month or so, and this stock is clearly underperformed. And I think it's a bit of a telltale sign. And again, I'll just throw this out there. I don't know what happens if and when being the price of Bitcoin trades down to the average price of the holdings at MicroStrategy, but something's going to happen at that point. And it's not just MicroStrategy. I'm not picking on them. Throw up a chart of Coinbase. I mean, we're at pretty big levels here in Coinbase. I think in August of this year, we got down to about $300 and we bounced. If you go back and look, it was earlier this year. It was basically January, February of this year, where $300 was resistance on the upside. So we're approaching this $300 level, which I think is going to be pretty critical support. So it's not just MicroStrategy or strategy that's sort of falling on difficult times.
Yeah, and we've been saying this now for months and months. We've been talking to a lot of friends who like these treasury strategies. I mean, it's been my view, and I think you've agreed with me, at the next financial crisis, and I'm not saying we're going to have anything to the scope of what we had in 07, 08, 09, at the heart of it is my belief is going to be a lot of this funky stuff. It's going to be these treasury unwinds. It's going to be stable coins. There's going to be some stuff there. It's going to be a lot of stuff in the related, sort of space, the infrastructure that supports this sort of stuff. And I don't know when this was from. It was like some Aspen Institute. I saw the video someone shared with me of Andrew Ross Sorkin interviewing Peter Thiel. Said he had sold most of his Bitcoin, doesn't think it goes up materially. A lot of the reasons why it existed or did so well over the last, call it 15 years, they no longer exist. So again, I think that's interesting. Let's quickly go to this headline guy. OpenAI awards this contract to AWS, Amazon's obviously cloud unit. And I just want to make one point. It's really interesting. Brad Gerstner and Bill Gurley, they have a podcast, great podcast, and they had Satya Nadella and Sam Altman on last week. We know that Satya and Microsoft are huge investors in OpenAI. They have some exclusive deals on their technology and the like, but for 2 years now, Sam Altman and OpenAI have been trying to diversify away from Microsoft. So Altman and Satya were on this podcast on Friday, okay, and then this deal announcement drops on Monday, which is pretty interesting. Now, a lot of folks, and Doug Cass has been detailing this, and I think you and I have been in this camp. There's something fishy about Sam Altman. There's something fishy about 2 years ago when he was bounced out of the company, right, by a lot of his co-founders. Elon Musk has been extremely critical of him. He's been, Elon was a co-founder of this when it was a full not-for-profit organization going back 10 years or so. So there's a lot of folks who have their antennas up about Sam Altman. And last week on this podcast, and I think Jacob has the tape. Let's just run it because it's pretty fascinating. Brad Gerstner, who owns OpenAI in the private markets, is only in the private markets, asks a question. It's like a lot of people say, you know, those questions, you know what I mean? How can a company who does this, who loses a lot of money and $13 billion in revenue, how can they fulfill $1.4 trillion in obligations like this? Okay, like this is part of it. And look what he says here. This is pretty fascinating.
You know, how can the company with 13 billion in revenues make 1.4 trillion of spend commitments? You know, and you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. I just enough. Like, you know, people are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would,
including myself, including myself.
People who talk with a lot of like breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, you know, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. We do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So, you know, there are not many times that I want to be a public company, but one of the rare times it's appealing is when those people are writing these ridiculous OpenAI is about to go out of business and, you know, whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that. We carefully plan. We understand where the technology, where the capability is going to go, and how the products we can build around that and the revenue we can generate. We might screw it up. Like, this is the bet that we're making, and we're taking a risk along with that.
I think it's a pretty honest answer. I mean, you know, he's saying, listen, we're making big bets. And, you know, for you folks that think the bets are not going to work, have at it, as you would say. You know, if you want to short the stock, you can't. But, Brad, if you want to sell your shares, I'm sure I can find you a buyer. Now, what I will say is, you know, the math suggests otherwise. But, you know, the answer is, I think that's the right answer. Like, we're seeing revenue growth, and we think we're going to continue on this trajectory.
Yeah, I mean, I look at the exact opposite way. I mean, like, I think this guy, like, it just seems like, I mean, first of all, he couldn't even look at the camera and talk to these guys. And maybe there's something else going on there. I don't know. But my point is like, to be that defensive, and this video was making the rounds all weekend, and Doug Cass had a great note on it. And I just think that, like, if you think Jensen is a bit of a problem, the way that they're, you know what I mean, doing all this circular sort of stuff, these guys are a much huger problem. I mean, like, it's a much bigger problem. And the other thing is, Sam doesn't have any friends. I mean, Sam's got friends for the people that, you know what I mean, like, we're doling out. Obviously, Amazon's pretty excited to get a $38 billion deal and this, that, whatever. But at some point, if the whole thing is a house of cards, and they can't grow outside of, they can grow use of ChatGPT. It's a very useful thing, but can they monetize it, right? Like, that's the question. He talks about devices. He paid $6 billion for Johnny Ive's company that has no product. It was an acqui-hire. And supposedly some of the reports are, they don't even know what the hell they're doing. Like, they're going to create this device or this or that or whatever. So it better be something in the, you better hope that enterprises, businesses figure out use cases for this technology. You better hope that demand still stays there. And, you know, on the other side of this, NVIDIA's up 3%. Why? Because all this new data center commit, you're going to need to buy the GPUs, this and that, whatever. So it's all still happening. And I just think Sam Altman is a much bigger risk than Jensen Huang. I mean, he's a publicly traded company, and he's building a product that people are buying. You know what I mean? Right now,
I think that's right. Just the transparency that being a publicly traded company affords. You're right that given the choice of the two, I think you're right that OpenAI is a bigger risk. But I'm not as apoplectic about. I mean, him not looking in the camera. I think people don't understand where a lot of times people look at the person they're talking to instead of the camera. So I'm not going to make a huge deal out of that. But your point is well taken. And listen, it was Elon Musk that way back when, I think it was Inauguration Day or something, whenever all those CEOs went to the Oval Office, talked about a lot of these companies, they're talking a big game, but they don't have the money to back it up. So, we'll see. We'll see how it plays out.
Stargate announcement. Well, Guy, wouldn't you love to talk about some other things here? I mean,
I would. Yeah. I mean, absolutely. And I think, look, there are a couple of things to talk about. I mean, again, there's a lot of day left, but on another day where the market sort of opens higher, we're sort of drifting lower. But the one thing that sticks out to me amongst many is the underperformance of Apple. And that happened late last week. And when they reported earnings last week, we looked at each other and said, yeah, it's a big number. We get it. But my point was they're being rewarded for those big numbers. So don't just tell me the scope of the numbers and how big they are. I get it, and the market obviously gets it. It's the valuation that should be concerning. And you talk about this all the time, and I brought it up. It's still a company that at its peak the other day at $277 was trading at 33 times next year's numbers with high single digit earnings and high single digits revenue growth. I mean, that to me is an expensive company.
Yeah, let's pull up this. You see that 200-day moving average? It's kind of flat in there. You make a uptrend from that low in early August, gets you to $260. I mean, that was also the breakout level. It's going there. The question you have to ask yourself is that, does it become a bit more of a utility if you have these new phones out there with greater capabilities? Once Apple Intelligence, the Siri thing rolls out, if it really is, a big step up from what exists right now as far as that experience, at some point you're going to see that services revenue that did reaccelerate, right? In this last quarter.
Services, I think, is up to 27% of overall revenue, which deserve it of a higher multiple. But again, I mean, I think at 33 times, it's sort of more than baked in. But yes, you're right.
Well, so then also draw that horizontal line from the high in late December. I mean, 260 is the number where, you're going to have to make a decision. I don't mean have to make a decision. It could be the spot in which, you set a stop to the downside. If you bought it into the print, it had a big run into that. I just think the 260 level is really important. I hate to do this. Going back to Amazon for a second, Guy. So it's up 5% right now. Just look at the last few trading days. So we had that. Let's isolate the last few trading days. Let's kind of zoom in a little bit. So you had that big gap on the earnings, right? And I think a lot of it had to do with like expectations were not particularly high. So the day of earnings, the stock closed at its lows. The day after earnings closed at its lows, whatever. My point is like, once you've gotten these gaps, you've seen this consolidation, if you will. And I just think that's kind of really interesting because at some point, it's probably going to be on its way back to filling in both of those gaps. Does that seem?
Put a longer term chart up. And I think Amazon, if I'm not mistaken, trades about 50 million shares a day. I don't know what it's traded yet, but if we were to sort of open and close at the same price today, and I think the opening was basically right around 256, if I'm not mistaken. So let's just say we flatline for the rest of the day, which is possible. And then we open lower tomorrow. Then watch out, folks, because you're going to hear a lot of people start talking about what we call a doji star reversal in the business. And again, I look and see what the volume is already today. My sense is we're probably approaching normal volume for the entire day. This is something to watch for sure, because this is not a pattern you see that often, especially with a company that's approaching $2.75 trillion in market cap.
Yeah, no doubt. I just thought that was worth bringing up, and that's a very nice breakout. But oftentimes, as our main man Carter Braxton Worth likes to say, you will see a check back towards that breakout level. Holds, that's probably a decent level. I also want to just highlight one other thing, guys. So these Neo Clouds, CoreWeave, Nebius, they're both down 5%-ish today, which again, maybe the more deals you see, in OpenAI with an AWS or whoever with Oracle or whoever with, Google Cloud or whatever, maybe that is like one of the things that you and I have suggested, that these are the ones that get left holding the bag, right? Yeah, they have contracts with a lot of these big, users of this compute, whether they are the data center guys. Microsoft at one point was 70% of CoreWeave sales. It's just worth noting, and our friend Jim Chanos, who I had dinner with on Thursday night, actually, and we were talking about a lot of this. He put a tweet out the next day talking about rental rates for NVIDIA GPUs. Or for Hopper in particular, right, which is the last generation. They've gotten killed. Doug had this in one of his notes this weekend too, and his streetpro.com. It's just interesting to see how you're seeing, and this is Moore's law, baby. You're seeing halved and the price going lower and lower. But now you're going to see it opposite. Blackwell is going to double the performance, but it's not nearly going to be double the expense. And then the question you have to ask yourself is, why do you want to get left holding the bag with these last generation chips? We've been talking about this for a while. Well, you know who's in the worst position to do that? CoreWeave.
And we have talked about the business model and the amortization schedules that a lot of these companies use. And historic to me, and you know this stuff better than I do, but historic amortization charts or calendars don't make any sense when things are obsolete. within 3 to 6 months. And that's not me talking. I mean, Jensen Huang has basically said similar. I mean, in terms of just how quickly these things get cycled through. So yeah, you're right to point that out. And, again, I don't think you're saying this, and I'm certainly not the core weavers the market, but these are sort of the secondary and tertiary names you have to look to if you're looking for sort of cracks in the armor. And the cracks are happening right before our eyes.
All right. Last thing I promised before we get to some questions in and around this AI trade, guy. Let's look at Palantir. This report
tonight, right?
Tonight after the close. And listen, you look at what's going on here. It's run into that print. The implied move in the options market is about $20, or it was on Friday's close. Let me go look at it really quickly here. You can do that math. So it's about 10% on average. This stock, guy, it was up 8% last quarter. The quarter before that was down 12%. The quarter before that, it was up 24. The quarter before that, up 23.5, up 10%, down 15%. Just showing you the magnitude of these sorts of moves, and they don't get smaller as the market cap gets larger. I mean, this has a $450 billion market cap right now that maybe at best, depending upon what they guide to for Q4, it's a $482 billion market cap, and they might do, let's say, $5 billion in sales this year. You can do the math on that. This one astounds me. I mean, it's just, I don't even know.
No, I mean, you're approaching 100 times sales, and the revenue. It's one thing if revenue went from, half a $1 million to, $100 million to $2 billion. So you saw sort of like some trajectory of revenue growth, but you can go back and look on your machine, I'm sure. I mean, this company is somewhere between $4 and $5.5 billion of revenue a year for the last few years. So it's not like there's this astronomical revenue growth. So what's the right revenue to be sitting on top of a $500 billion company? I mean, historically, you would at least want to see, I would imagine, something around $50 billion, but we're nowhere near that. So,
we just saw Sam Altman throw a hissy fit over the $13 billion in revenue that he has, and he loses a lot of money, and they last raised at $500 billion. So it'd be interesting to see, by the way, at that mark that they got at $500 billion with OpenAI, it was a lot of insiders selling. I'd like to see if actually Sam Altman, maybe one of you guys could figure that out who are listening or watching here. Did Sam Altman sell any of that on that $500 billion print? But to your point about the revenue growth, guy, I mean, last year it was $3 billion. This year is expected to be $4.2 billion. Next year is expected to be $5.7. And just to be clear, a lot of this revenue that they have is not on their AI platform. I mean, it's just like, so this is not a pure play AI company. This is going to have to be a massive, massive beat and raise, in my opinion, for the stock to go much higher. But that is what it is. I just wanted to kind of throw that out there. Should we get some questions that are not AI related, guys?
No, we should. I mean, and I'm going to look, but real quick, throw up the bond market too in the form of the TLT, because that very quietly has been moving to the downside as well. And again, I don't want to make a big deal out of 10-year yields being 4.1% because it's not a big deal. Carter will be quick to point that out, but you're starting to see a bit of a reversal here in the TLT, which means yields are starting to move higher. I think I know what's going on here, but I've thought that for quite some time. Sometimes it's been right, sometimes it's been wrong, but you got to be careful. If we get to sort of 88.25, 88.5 here in the TLT, it's going to be some interesting levels, especially given the fact that you have a huge gap in the chart from September earlier when you had that huge gap higher, the huge move lower in yields.
Yeah, let's pull up the home builders. I mean, you'd say 4 to 4.1 in the 10-year. That shouldn't be a huge deal. Like, look at this thing sitting right on that flat 200-day moving average, right? So this is the XHB. This is a really interesting spot. And when we talk about like what's not broadening out, this is one of them. And I think this is kind of important. I mean, thoughts here on the home builders.
No, they look that the XHB is going to look a lot like the individual names. This look like DHI, PHM, TOL. There's been no real meaningful bounce over the last couple of weeks at all, despite the fact that the market's gone higher. And these, if you look at the home builders at large, they all made their all-time highs. When I say all, I mean the four names we talk about: September, October, November of last year. They all cratered like everything else into April, May, and they all have bounced. Since the bounce that we saw in late August, early September, they haven't bounced at all. They've been going straight down on a broader market that's done well and in a bond market that until recently has hung in there as well. There's something going on in the home builders. And you mentioned it. We are at huge support levels here, not only in the XHB, but the individual names. So in this one specifically, but through 103, I think we're going to be having a very interesting conversation about what's really going on with the home builders. I think it has everything to do, by the way, with more inventory being out there and the fact that the job market's probably deteriorating a lot worse than we realize.
Yeah, and we don't have the 30-year fixed mortgage going below 6%, which was kind of like a magic number. Look at the CME FedWatch tool for a second here, because you basically get a sense that after that meeting that we saw last week, that obviously the December is a huge debate, the cut, right? That is expected or was expected. Now it's a 68% probability. If that starts to go lower, the probability of a cut, then you're likely to see mortgage rates, kind of go higher, right? Which will not be good to kind of loosen up the market, especially as you just said, you're seeing more inventory come online. What do you got, Guy? You got questions?
No, we have some gold questions, I know, and we talked about it last week. And, it's not like gold is exploding higher, but it looks like it might have found a little bit of a base. I know last week Carter said you're still selling gold here. You probably have a similar view, but I don't know. I think we might have done enough work to the downside. Now, if something else were to happen, we'll have a conversation. But what I saw last week suggests we might have exhausted ourselves in the short term to the downside. Miners actually picked up late last week. They're doing not much today, but I think gold might be making the turn here. So we'll see. And that coincides, by the way, with Bitcoin, as we mentioned earlier, not trading particularly well.
We have a question on the Chipotle, which is a name. The stock is not
blowout.
Yeah, well, it's not near and dear to your heart. This is from Chris L. What do you think is a good level to start scaling into CMG? One thing that there was 2 articles in the Journal this morning. One was talking about recent college graduates and the difficulty they're having finding a job. And in that article, it said some are moving back in with mom and pop, some are making coffee at home, some are like avoiding quick serve restaurants and bringing their lunch to work if they have a job, that sort of thing. So that was one. And then there was another article. It was talking about, I don't know what the hell the other article. There was another article. There was 2 articles. Oh, it was talking about Chipotle and their strategy to lean into young buyers. So that's kind of coming unraveled. Pull up a 5 year. So you say to yourself, listen, we've seen this stock in this sort of situation before. Go back 10 years, right? At some point, this is a brand that's not going away. Let's be honest. They'll figure out.
It's not going away, but the growth days have gone away. And, we talked about, listen, this is a name I love for a long time, and maybe I stayed bullish too long. But when the quarter started to deteriorate and the comps started going the wrong way, we basically said when things, and this is like a technology thing as well, when you start to see decelerating comps or margins that are starting to contract at valuations that historically never make a lot of sense, that's when you got to pull the ripcord. And again, we've talked about this on Fast Money. We probably talked about it on this show. On the way up, when comps are accelerating, nobody looks at valuations at all. But when comps start to deteriorate and margins start to deteriorate as well, that's the first thing people look at. And even with this move in CMG, which has been cut in half now since the all-time high, it's still an expensive stock. So what's the right level? Well, I thought it would hold sort of 34-ish, which was the October of 2023 low. It blew right through that. So you might have to go back, I don't know. You might have to go back all the ways to mid-2022 or so when it was a $27.50 stock to find what could be support. Because right here, you have no valuation support whatsoever.
All right. We're probably 80 handles in the SPX from the all-time highs. Okay, we're just hanging in here. We got a VIX at 18. So is there something that's going on here? Is it the narrowness of the rally, basically, it's like just encapsulating this whole conversation we've had for the last 29 minutes? Is that it?
That was going to be the other thing that I mentioned when you said, what are you looking at? Was going to be the volatility index, which, again, I didn't think would get as low as it did, but I'm still one of these people that believe volatility is going to be a thing before the end of the year. And when I say a thing, somewhere between 25 and 30, and this is November now, so it would have to be at some point this month, I would assume, because December is typically not a lot are happening. So, yeah, I think the VIX is trying to tell you on what is clearly a benign day in the market. NASDAQ up 0.3%. Forget about the Dow Jones, the S&P basically unchanged. to have a VIX with a move like this today, what is it telling you? And what is Bitcoin trying to tell you as well? So yeah, that's clearly something that's on my radar screen.
All right. Lastly, good friend of ours, Max Myers, CNBC producer, who we've been friends with for a long time. He sent me a screenshot from Polymarket this morning. This is the prediction market. Supreme Court rules in favor of Trump's tariffs, ? It's saying a 36% chance that they do rule in favor. Okay. So it's interesting. So what happens? Let's say this is this week. They strike down his ability to kind of keep these tariffs in place. Is that something the market is not appreciating? Because
probably
I don't know
not.
the answer.
Because what happens to all the tariff money? I don't know any of this stuff, but what happens to the tariff money that they're taking in already? Is there some sort of clawback? What is the market priced in? I don't, but I'll answer your specific question. Is the market pricing that in? No, I don't think so. Maybe the VIX is starting to sniff it out, but I don't think the broader market is pricing it in.
And that's where it's going. I mean, like, think about it. The market in general, we don't care about a shutdown, right? Like tariff stuff, we seem to be on the other side of it. Investors seem pretty okay with all that. I mean, the list goes on and on. The Fed, they might not cut in December. Who cares? The S&P at the high. So again, I think these are all things to kind of pay attention to. I don't know what the answer would be. Let's just say they voted against the ability for the president to do that. So we're not taking that tax revenue in, but it's not going to be a strain on consumers and companies and this, that, whatever. So again, your guess is as good as mine on that. Maybe tomorrow, guy, at 11 a.m., we'll have something other to talk about than.
I hope so. I hope so. But
yeah,
who's to say? Maybe there's another OpenAI deal tonight. Never with Palantir or something.
Probably is. That's good. Good call there. Let's go to the poly market. Let's see what they're saying. All right, everybody. We'll see you tomorrow, 11 a.m. Appreciate you being here. Appreciate the questions. Thanks so much.